Good day, class. You're welcome to today's lesson. We'll be looking at the history of the Nigerian capital market. History of the capital market. Here we'll be looking at the following subtopics. We'll be looking at historical development of the capital market from 1946 to date. We'll also be looking at money market and institutions involved in capital market. Historical development of the Nigerian capital market from 1946 to date. You should know that what I'll be giving to you here is just a brief history. We'll not make it too elaborate. You should know that the origins of the Nigerian capital market dates back to colonial times, when the British government ruling Nigeria at this time sought for funds for running the local administration. You should know that these funds, majority of the funds were gotten from agriculture, produced marketing and solid mineral mining. So discovering that these sources were inadequate, that they were not sufficient to meet its growing financial obligations, the colonial administration decided to expand the revenue base. This it does by reforming the system of revenue mobilization, taxation, and other payments. The colonial government also saw the need to raise funds from public sector to cover temporary shortfalls in funds availability. So this necessitated its reasoning that it is necessary to establish a financial system by setting up the basic infrastructure for its takeoff, while awaiting the development of an organized private sector, or pending the development of an organized private sector. So the first step was to secure the necessary finance for the development of this infrastructure and long-term capital project. It was done in 1946, following the promulgation of the following the promulgation of the 10 years plan local loan ordinance for the flotation of the first 300,000 naira at 3% government stock between 1956 to 1961, with its management vested on the Accountant General. In 1957, the Government and Other Securities Local Trustees Power Acts were enacted. This law specified the types of securities in which trust funds may be invested. It also clearly defined the powers and responsibilities to trustees. More so, the colonial government set up the Professor Babak Committee. The Professor Babak Committee to examine the laws and means of fostering a share capital, so a share market in Nigeria. You should know that part of the terms of reference of this committee included the possibility of establishing a capital market in Nigeria. The recommendation of the committee, among others, was creation of facilities for dealing in shares, the establishment of rules regulating share transfer, and measures for encouraging savings and issues of security of government and other organizations. You should know that by the end of the year 1957, the colonial administration had promulgated the General Loan and Stock Act and Local Loan Register Stock and Securities Act on the recommendation of the Babak Committee in 1950. Of the Babak Committee. You should know that the Central Bank of Nigeria was established through the Central Bank of Nigeria Act of 1958. The colonial administration later issued the first 2 million naira Federation of Nigeria Development Loan Stock in May 1959. And by April 1960, the Central Bank of Nigeria issued the first Nigerian Treasury bills, which were meant to provide an avenue for the investment of short-term liquid funds pending receipt of its own revenue. You should know that in 1959, it also enacted the Statutory Corporation Guarantee of Loans Act, while in April 1960, the Central Bank of Nigeria issued the first Nigerian treasury bills, which were meant to provide an avenue for the investment of short-term liquid funds in Nigeria, and it assists in providing government with funds pending receipt of its revenues. On September 1960, the Lagos Stock Exchange was incorporated as a private limited liability company. It was limited by guarantee under the provision of the Lagos Stock Exchange. The Central Bank of Nigeria Decree of 1991 was also promulgated to expand the functions of the Central Bank of Nigeria. It granted it great autonomy in monetary policy and also repealed the Central Bank of Nigeria Act 1958. And in 1992, the first municipal bond in Nigeria capital was floated by the Lagos Island local government. On June 17, 1998, the Abuja Stock Exchange was incorporated as a public limited liability company as the second bourse in Nigeria after the Nigeria Stock Exchange. And in 1989, the Company and Allied Matters Act (CAMA) was enacted to regulate the corporation and activities of all bodies in Nigeria. It should know that sections 541 to 623 specifically cover dealings in the security of companies and vest its administration on the Corporate Affairs Commission (CAC). This will now take us to money market. You should know that everything that I've just said on the history of the Nigerian capital market is very brief. You have to read further to expand your knowledge. It's a very brief summary of the history of the Nigerian capital market, as there are other activities that took place which are not herein listed or said. So this now takes us to definition of money market. You should know that money market can simply be defined as a market for short-term loan. And money market consists of individuals or institutions who either have money to lend or wish to borrow on a short-term basis. You should know that the following instruments are traded in the money market. First of all, we have treasury bills, which are instruments which the federal government of Nigeria uses to borrow money for a short-term period of 3 months. You should know that the maturity date for treasury bills is 91 days. We also have treasury certificates, which are instruments used to bridge the gap between the treasury bills and long-term government securities. They are issued by the Central Bank of Nigeria. The advantages of money market include provision of finance. You are already aware that money market enables entrepreneurs and investors to raise enough finance through borrowing to run their businesses. It also creates extra income, since the money invested in money market is capable of yielding extra income in form of interest. You should know that money market promotes economic development by enhancing, since it enhances, this is done since it is borrowing from money market is enhanced. What do I mean? You should know that economic growth and development is enhanced through borrowing from money market. That's what I meant. Ability to recall invested funds. Funds invested in the money market are very easy to recall, and money market also enhances savings, since it provides opportunity for those having surplus funds to invest, thereby enhancing savings. The following institutions are involved in money market. We have the central banks, commercial banks, acceptance houses, finance houses, discount houses, and insurance companies. This now takes us to functions of money market. Money market provides short-term loans. It encourages investment, effectiveness and efficiency of monetary policies. It facilitates transfer of funds and promotes liquidity and safety of financial assets. This will now take us to capital market. You should know that a capital market is a market for the lending and borrowing of long-term loans. The money lent and borrowed in this type of market is used to finance capital projects. You should know that the following institutions are involved in capital market. They are the Central Bank, Development Bank, Building Societies, National Provident Fund, insurance companies, and stock exchange. Advantages of capital market. The following are the advantages of capital market. It provides long-term loans, as I've earlier said, and it also mobilizes savings, growth of merchant banks, and also general running of the economy. Functions of capital market. Long-term fund mobilization, avenue for lending and borrowing, channeling of funds to productive investments, economic growth and development, and also government can borrow long-term capital. Similarities between money market and capital market. You should know that both money market and capital market, in both money market and capital market, funds can be obtained through what? Borrowing. Also, both deals in financial assets. You should also know that lenders can direct their funds to either money or capital market. You should know that both money market and capital market ensure economic growth and development. The following are the differences between money market and capital market. While money market provides short-term funds, capital market provides long-term funds. Money market yields relatively low returns, while capital market yields relatively high returns. Money market involves low risk, while capital market involves high risk. Also, money market has a tenure of about a year, while capital market has a tenure of about 5 to 10 years. With this, we've come to the end of today's class. Wishing you a lovely day ahead. Bye for now.